LLCs are by far the most popular entity type amongst small businesses. But what exactly are the benefits of an LLC? How does it protect your business? And more importantly, what are the tax benefits of choosing an LLC over another entity? The answers to these questions may influence the entity structure that you choose for your business and how much money you end up paying to the IRS. Hi, my name is Sherman, a CPA with Life Accounting, a full-service accounting firm that helps small businesses grow and manage their finances. In this episode, I'm going to explain all the tax benefits related to LLCs. By the way, if you're new to our channel, please be sure to subscribe so you don't miss out on future videos that can help you grow your business. Also, if you extract any value from this video, please help me out by clicking the like button below. Lastly, although I am a licensed CPA, the information in this video is solely for informational purposes only. It is not meant to take the place of legal and accounting advice specific to your business. With that said, let's talk about some LLCs. Before we get into it, let me address the most important topic on everyone's mind right now: the tax loopholes associated with LLCs. Now, I'm sure you've heard of all the stories about how the rich doesn't pay any taxes, or how politicians and alleged millionaires and billionaires have tax schemes to not pay any taxes to the IRS. And maybe you've heard that LLCs is exactly what can help you evade those taxes altogether. Well, I've got some news for you. It doesn't. LLCs is not a tax loophole. In fact, LLCs have nothing to do with your taxes in general. LLCs are legal entities that protect you from personal liability in the event of a lawsuit, for example. For tax purposes, your LLC is viewed as either a sole proprietorship or partnership typically. In either case, it doesn't necessarily mean that you're evading taxes. However, when stacked up against other entity types, there are ways that you can look at an LLC as a tax advantage or benefit. So with that said, let's go ahead and dig into what those tax benefits may be. Tax benefit number one: pass-through taxation. When it comes to entity taxation, there are two types of taxes that you need to be aware of: pass-through taxation and double taxation. Pass-through taxation means that all the money that your business receives is subject to taxation. Even if you did not pay yourself a dime from your business income, you will be taxed on it. Now, double taxation, on the other hand, means that technically you're taxed twice. First of all, your business is taxed on all income. And secondly, when you are paid, you are also taxed personally on the income that you take out of your business. With that being said, a major tax benefit of LLCs is that it is only taxed once with pass-through taxation. Here's an example of what I mean. Let's say you made $100,000 as an LLC. If your tax rate is 25%, then you would only pay $25,000 in taxes as an LLC. However, on the other hand, let's say you're a C corporation. If you made $100,000 as a C corporation, your business will be taxed on that income first. If the corporate tax rate is 20%, then you would hypothetically pay $20,000 in taxes. But then you have to also pay taxes on what you pay yourself from your corporation. So let's say you decide to pay yourself $50,000 in W-2 wages, and this puts you in a 20% tax bracket. This would mean that you would have to pay an additional $10,000 in taxes due to your personal income that you've taken from your business. So in total, as a C corporation, you would have paid $30,000 in taxes, whereas as an LLC, you would have only paid $25,000 in taxes. Now, to be fair, this is a oversimplified example, and there are some additional things to consider, like self-employment tax, for example. However, in general, this is an example of how someone could view an LLC as a tax benefit. Tax benefit number two: S corporation election. Another tax benefit of LLCs is that you can elect to be taxed as an S corporation. S corporations are unique in that you don't have to pay self-employment taxes. However, you are supposed to pay yourself a reasonable salary, aka W-2 wages for the work that you perform. Now, the taxes you pay on your W-2 wages will typically be about the same as what you would have paid in self-employment taxes. However, if your business earns over a reasonable salary for your own work, then electing to file as an S corporation may be worth considering. Again, this is simplified information, but if you want to weigh the pros and cons of this, you can contact us to create a custom tax plan for you. All right, tax benefit number 3. Tax write-offs. The next benefit of an LLC are tax write-offs. Now, this is a major benefit for self-employed individuals who may not be writing off everything related to their business, like your home office expenses, business travel, and other business-related expenses. A LLC is typically considered separate from you as an individual, which means that your business finances should be separate from your individual finances, making it much easier for you to keep track of your business expenses in order to deduct it from your tax return. For example, if you have a business bank account, you can sync your financial information with a bookkeeping platform like QuickBooks, for example. Then you can categorize all of your business transactions so you can easily start deducting eligible expenses from your tax return. Tax benefit number 4, pass-through tax deductions. Now, I know what you're thinking. I'm about to completely contradict myself, but I'll explain why in just a second. Generally, there is no difference in tax write-offs for an LLC versus another entity type like a corporation. However, LLCs are eligible for the 20% pass-through tax deduction that was passed through the Jobs Act. All pass-through entity types, so proprietors, partnerships, LLCs, and so on, can deduct up to 20% of their taxable income from their taxes. So for example, if you were preparing to file a tax return that would report $100,000 in income, then this deduction would reduce your taxable income to $80,000. If applicable, the $20,000 in savings would save you thousands of dollars on your business tax return. Now, to be fair, there are a few rules and regulations that may disqualify you from receiving this tax deduction. However, if you are eligible for it, it could turn out into some big tax savings. Tax benefit number 5, LLCs are easy to set up. One of my favorite things about LLCs is that it is fairly easy to set up, which ultimately makes filing your taxes much easier and less stressful than other entity types. You don't have to worry about divvying up stuff like common stock and preferred stock, and there is typically less record keeping required for setting up your LLC in the first place. Ultimately, there is less compliance required for setting up LLCs. So if you don't have a lot of things going on in your business, starting off with an LLC might be a great option for you. Okay. So those are the major tax benefits of an LLC. Now let's recap today's episode. Today we explained the biggest tax advantages of an LLC. First, we debunked the myth that LLCs in of itself is a tax loophole. It's not. An LLC is simply a legal entity that comes with some protections for you as a business owner. Then we went into the major tax benefits of a LLC. Those tax benefits were pass-through taxation, S-corporation election, business tax write-offs, pass-through tax deductions, and finally, the ease of setting an LLC up. I hope that you found this video useful and interesting. If you did, please go ahead and give this video a thumbs up or comment below with any questions you have. Also, don't forget to subscribe to our channel so you don't miss out on other accounting content that we're putting out to help you grow and manage your business finances. Until next time, take care.